you financially healthy? So what we want to know is we want to understand what it means to be financially healthy. So a lot of times today you hear so much about the credit score, your credit score this, your credit score that, and why that's a piece of the equation. It's so much more than just your health, your credit score. So we're going to take a look today at your overall health score. So we're going to look at some categories of spending behaviors, savings behaviors, borrowing behaviors, and planning behaviors. And during this process, you'll also get a chance to determine your own financial health score. And then we'll talk about steps that we can take to maintain or improve that. So your attitude and your approach towards money has a huge impact to your overall score. So keep in mind, it is not just how much money you have. Actually, it doesn't even have as much to do with how much money you have, but more about your outlook and how you use that. So again, we're going to cover a lot. It can be really easy for us to be judgmental or criticize ourselves during this process. So I encourage you, do not label. Do not label. In this process, there is no good, there is no bad. We want to evaluate things, become aware of things on, are they working for us to reach where we want to go, or are they not working for us? So these negative feelings, they're not going to help us bring sustainable positive change. Positive change does not stem from negativity. So try not to let yourself get overwhelmed, because that's another feeling that'll let us quit. So we're going to talk about starting small, starting easy, and starting with what's achievable so that we can grow from there. All right, so what is financial health? At this point, we're going to take a couple of polls just to kind of gauge what financial health is, what we might have in mind financial health is before we get started. Is it launching our poll? It did launch our poll. All right. So our first poll, what is financial health? So please select all the ones that apply. Is financial health your overall satisfaction with your financial solution? Is financial health your ongoing plan to reach financial goals? Is financial health inheriting $1 million from a relative? Is financial health your financial behaviors, such as budgeting, savings, and debt reduction? Or is financial health your financial knowledge and money set or mindset? I think I need stronger glasses. Sorry. All right, so we're going to take just a couple more seconds for you guys to send those in, and then we are going to close that poll and take a look at those results. All right, so let's share and see what results we got from that activity. You know why I cannot see that? Keisha, would you like to read out our results for us? Since mine is showing on the screen very small, if you wouldn't mind reading those out for us.
Sure thing. So for what is financial health, we have, let's see, 0% said inheriting $1 million. So that's good. That's not necessarily going to make us the most healthy necessarily. It looks like 82% came in for 3 things: your overall satisfaction with your financial situation, your ongoing plan to reach financial goals, and your financial knowledge and money mindset. And we had 100% chime in for the year financial behavior, which includes budgeting, savings, and debt reduction.
Awesome, awesome. You guys know exactly then some of the topics we're going to be talking about today of financial health. So financial health, thank you, Keisha, by the way. Financial health is not just one aspect, it's going to be multiple aspects. So our mindset, our behaviors, our plans, our overall satisfaction, it's the big picture. So awesome, awesome. All right, let's take one more. All right, so our next question is about the health score. So the health score that we hear, or not the health score, but the credit score that we hear about all the time. So does your credit score represent your gauge of financial health? Is your credit score the one and only gauge of financial health? So if you'll go ahead and send in your responses, we will go ahead and close the poll and see what we have said. All right. So we have 20% saying it's the total gauge, and 80% of us saying it's not the total gauge. It's just a piece of the equation. So absolutely, it's not the total gauge. It's just a piece of the equation. However, in our society, sometimes it can feel like it's the one and only gauge. If you're going to look for some services, sometimes it can feel like that's all that they look at. All right, let's take just a couple more questions. Does having a checking or savings account make you financial well? Does just having a checking or savings account give you financial wellness? We'll give you guys a couple more seconds to send in your votes. Awesome, and we're going to go ahead and close the poll and share that and see what we have. Absolutely, it does not. It can help in a lot of areas and make things more secure and easier, but it is absolutely not a gauge of financial health. All right. How does debt impact your financial health? It has no impact. It can reduce financial flexibility in the options that I have, and it can also increase stress, or any amount of debt equates to poor financial health. Which one of these do you feel like is true? Okay, we're going to go ahead and close that. Let's see what we've got. Absolutely, 100% of you said that debt can reduce our options that we have and increase stress. So most of us have a little bit of debt that we are working with, car, mortgage, things like that. But too much debt can absolutely get in the way of what we're trying to achieve. So let's take one last poll question and then we will move forward. All right. So this is a how do you feel? There is no right or wrong here. How confident are you about your finances? Very confident, somewhat confident, neutral, so neither here nor there, not very confident, or not confident at all. Again, there's no right or wrong. Okay, we're going to go ahead and close out the poll and see what we have there. Awesome. So 46, almost half of us are somewhat confident. So on the right track, just some areas that we want to improve. 15% very confident, and 15 and 15 on neutral and not very confident. So hopefully today we will cover some items that might give you some tips on how you can increase that confidence score, increase or maintain. If it's very good, we want to maintain it. Awesome. Thank you guys for participating in our poll. So let's start to look at the definition of financial health. Again, this can get a little overwhelming, so just let some of these concepts just rest and process through them. But looking at a definition from the Consumer Financial Protection Bureau, their definition of financial health is the following: being in control of day-to-day and month-to-month finances, having enough of a financial cushion or savings to be able to absorb any unexpected expenses. You're on track to meet personal financial goals, and you enjoy financial freedom without constantly worrying about money. So you'll notice that each one of these aspects of financial health influence the other. So when we're talking about having the cushion of savings in case an emergency happens, that can absolutely influence being in control of our day-to-day and month-to-month. And so not only will you notice that these can influence each other, but our finances can drastically influence other areas of our life as well, which we're going to talk about in a little bit. So by taking charge of several areas of our financial situation, we can either maintain or improve upon some of these areas. So again, I'm going to challenge you guys with the feeling of being overwhelmed. So we're going to cover a lot, and there's a lot in these definitions. So as we go through here, pick one thing or maybe just a couple of things, some small things that you can take immediate action on, either and create sustainable habits or a one-time action. So again, our goal here is sustainability. We're not just about reaching the goal of financial wellness, we're about getting there and staying there. So for an example of what we may be talking about here is, let's say our goal is to have $1,000. So when we bullet number 2 here, having that cushion in savings for unexpected. So maybe one of our goals is to have $1,000 in savings that we can use. So what are some of the small things that we can do to start to build that up? So we might start by automatically transferring $5 into our savings account every week. So we might go ahead and set up that automatic transfer. So this is an environment where we don't have to make that decision and it is happening automatically. Or we might decide, hey, I'm going to skip lunch out this week, or I'm going to skip this other item, and go ahead and make that immediate transfer over into our account. So we'll talk about some ways to save some money, to find some money, but the bigger thing is we want to get it working for us and getting into those accounts. So whatever your goals are, go back to the smallest action. What can we do to sustainably meet those goals? So looking at core aspects of financial health, this is what we're going to be talking about today. There are 3 key points that we're going to want to look at, and so these are not necessarily in the order that I put them in, but we're going to go through them. The first thing that they have listed here is being knowledgeable of resources that will help fund education and living expenses. So I'm going to take this a step further and say just being knowledgeable about the resources available to you. So the big thing here is being aware of resources that can assist us in helping cover some of our living expenses so that we can free up some of our funds to meet some of the goals that we want to meet. So maybe if one of those is in funding education like we have here, we're researching where there's grants or scholarships or other opportunities. So being aware of what resources are out there or what services are available in the community that will free up some of our funds to allow us to meet some of those goals. The second bullet we have here is the ability to maintain a balanced budget. Easier said than done, right? So when you have a balanced budget, your expenses total less, your monthly expenses total less than your monthly income. Therefore, we're able to do different financial goals that we have. And then the third bullet that they have here is preparedness for all expenses, not just unexpected and emergencies, but short-term and long-term goals. So this is another huge important aspect of financial health, is being prepared for all those expenses. So in my opinion, if I was going to rate these, I would rate being prepared for those expenses as the absolute number one thing that I wanted to have happen. If I'm in a position where an emergency is just going to tear down everything that I've built, I've spent a lot of work building it, for it not to be stable. So I would put being prepared for expenses as number one, having a balanced budget as my number two, and then knowing resources, that would be number three. But it does feed into the others, because like we said, if you know those resources, we're able to free up some of our own funds. All right, so we talked about this earlier, how financial health can translate into physical well-being. So it can absolutely impact other areas of our finances, but it can also impact other areas of our life. So I'm going to hear from you guys. So using your question function, if you will send in, what is your opinion? Does financial health translate to physical and mental well-being? So can financial health impact physical and mental well-being? So if you guys will go ahead and send your opinion into the chat function, or the question area, we will let Keisha read off some of your responses.
All right, so as we wait for some answers to come in, I see someone came in and said, yes, it can. Does financial health translate into physical and mental well-being? I pretty much agree with that. Pretty much, and everyone else that's coming in now is pretty much following the same route, saying yes. It's very important when it comes to your physical and mental well-being. I agree. I definitely feel like it's definitely one of the biggest stressors on anyone, because as I like to tell students that I work with in the schools, like, your finances kind of touch every aspect of your life in some way, shape, or form, right? So definitely, and everyone else seems to be in agreement with that.
Perfect. Thank you so much. So just some of the statistics that we have pulled here. 85% of Americans are stressed about their finances. That's a high percentage. Majority of our country, regardless of the income, and so that's a key, regardless of how much we bring in, like we talked about at the beginning, how much you make is not the only indicator of financial wellness. So the majority of our country, regardless of how much income they bring in, cannot come up with $400 in the event of an emergency. So like the last slide we talked about, I think that's the number one, at least for me anyway, from my opinion, is being able to cover an emergency, and having those funds set aside can really alleviate a lot of stress and keep our finances on track. The other thing, statistic we have here, is stress is becoming debilitating. It is not only causing health issues, but it's causing people to not be able to take actions to even plan for emergencies or those happy events like vacations and retirement. So financial health definitely translates into our physical well-being. All right, so today we are going to look at one way to look at, way to look at the components of financial health. There are several ways to do this and several assessments to do. So we are going to look at one, and like we said at the beginning, this is going to be looking at spending behaviors, savings behaviors, borrowing behaviors, and planning behaviors. So this is one of the ways to assess this, assess your financial health. But what I encourage you guys is be empowered, have the information and the resources, and do what works for you. Okay, so if some of what we're talking about doesn't work for you, let it go, but have the understanding that we're going to cover some key components that are going to get to financial health no matter what situation you're in. And so those may be true for you no matter what your plan is to get there. All right, so before we talk about ways to improve our financial health score, let's take a look at what that looks like for us. And this is going to be different for everybody. Again, this is an assessment. It's an awareness activity. In an assessment, there is no right or wrong answer. We're not labeling anything good or bad. We're just seeing where it is and seeing if it works for us or if it doesn't work for us. So if you guys have downloaded the handout, if you will look on page 5 of the handout, so page 5 and 6, we're going to be covering a couple of questions there in the categories of spending habits, savings habits, borrowing habits, and planning habits. And then we have a couple other questions about preparedness. So let's go through some of those questions. I encourage you guys to do this again at your own leisure. It will change as you make modifications and as you go through different stages of your life, and be okay with that if this is going to evolve. So let's take a look at what some of those questions might be that bring awareness to us as to where we stand with our financial health. So looking on page 5 of the handout, question number 1 under spending habits. Over the last year, how would you describe your spending patterns relative to income and expenses? So circle one of these. Spend much less than income, spend a little less than income, spend about equal to income, spend a little more than income, or spend much less than income. Question number 2. Over the past year, which of the following statements best describes how well your household is keeping up with your bills and credit card payments? Pay all bills and credit card payments on time. Pay most bills and credit card payments on time. Struggle to keep up with bills and credit card payments. Under savings behaviors, question number 3. How many months would you be able to live off of your savings? So exclude savings that are set aside for retirement accounts or sale of other assets, and consider your basic monthly expenses such as housing, food, and healthcare. How many months would you be able to live off of your savings? More than a year? Less than 6 months? 4 to 6 months? 1 to 3 months? Or less than a month? And I failed to mention one thing before we got started. If you have questions on maybe understanding what some of these questions mean, if you'll send those into the chat, we're monitoring that and we'll get back with you guys. So if you have any questions, so we'll take questions about the overall presentation at the end of the presentation. But right now, if you have any questions onto what some of this in the assessment means, go ahead and send that in through the chat. And so let's continue on with the questions. So again, under savings behaviors, we're looking at question number 4. So consider your long-term goals, like buying a house or getting a car, savings for retirements. Consider those long-term goals. How confident are you that you could reach those goals in the time frame that you hope to achieve them? Very confident, confident, slightly confident, or not confident at all. Now looking under borrowing behaviors. So borrowing, we're looking at credit and at debt. So under borrowing behaviors, question number 5 on page 6. As of today, how would you describe the debt in your house, your debt your household currently has? So consider money owed on bank loans, student loans, mortgages, medical debt. So how much debt does your household currently have? Do you not have any debt? And I love this one, about the right amount of debt. Well, what does that mean? So in this presentation, we'll talk about that. About the right amount of debt is the amount of debt that you can cover that does not cause you stress. So about the right amount of debt, a little bit too much debt or far too much debt. Question number 6, still under borrowing. What percentage of your monthly income goes towards your debt payments? Under 25%, 25 to 50%, 50 to 75%, 75% to 100. Question number 7. So question number 7 says, what is your household credit score? But I want to say, what is your personal credit score? Because everybody has an individual credit score. They are not grouped by household. So what is your personal credit score? Excellent, good, fair, poor, or I don't know my score. Question number 8, under planning behaviors. Do you take steps to maintain or improve your credit score? Yes, I take active steps. No, I do not take active steps. Or I do not need to improve my score. Question number 9. How far in advance does your household plan for upcoming financial obligations or opportunities? More than a year? Between a year and 6 months? Less than 6 months? Or we do not plan ahead for large expenses? Just 2 more questions under overall preparedness and our confidence. So question number 10 on page 7. How confident are you that your insurance policies and your household owns, will provide you with enough support in case of an emergency? So how confident are you that you have enough insurance to cover you in case something happens? Very confident, somewhat confident, only slightly confident, not confident at all, or I do not have insurance. And the last question, how possible would it be for your household to come up with $3,000 in the next month to deal with an emergency? Very possible, somewhat possible, not very possible, not possible at all, or I don't know. So take each of those questions that you scored for each of the answers that you put in the gray box there. So add up each of those questions. So this is going to give you a number out of 50. So you have 11 questions, so add up those 11 numbers and get a score, and that will be out of 50. And then you will take that score that you added up and you'll multiply that times 2. So you'll multiply that times 2. And again, there is no right or wrong. We are bringing awareness, engaging where we are. So don't let the labels of excellent, good, fair, and poor, do not let those influence your emotions. We are bringing awareness. Where are we on the spectrum compared to where we want to be? So maybe we added up a score of 40 and we multiply that times 2, and our financial health score is 80. Awesome. Okay, is this working for us or not working for us? So if you have good financial health, you may be effectively using financial products. So you have build resilience and you have opportunities, but we all have some room to either maintain and or improve. And if we have a financial health that is not necessarily where we want it to be, don't worry. We can improve that, and we're going to talk about some methods for being able to focus on that. What I want us to bring to the forefront is taking it one bite at a time. It can be overwhelming, but we're going to take this process one bite at a time. So we have another poll for you guys. So we are launching that now. So what I would like to know, and so we don't want to know what your score is, but I would like to know, is your financial health score working for you? So there's no good, there's no bad, there's no right, there's no wrong. Is it working for you? So it is working and everything is great. It is working, but I'd still like to improve. It is not working, and I'm ready to evaluate this and take some action. Or, you know what? It's not working. I'm overwhelmed, and this is just dumb. I should have found a better word than dumb, but I used dumb. All right. So if you guys will go ahead and send in your vote there. Is your financial health score working for you? All right, so let's see what we have. We have 20% of us that's saying it is absolutely working great. So we want to make sure to maintain what we have. 70% of us, so the majority of us said it is working, but we have areas that we want to improve. That's excellent. And 10% says it is not working, but you know what? We're going to evaluate what's going on and we're going to take some action. So speaking of action, let's keep going through our presentation and talk about what some of those actions might look like. All right, so like we said, we're going to look at the components of spending, saving, borrowing, and planning. So let's go through each one of those components, look at the milestones that we're shooting for, and talk about some tools that might help us get there. So under spending behaviors, we are financially healthy when we're meeting the milestones of spending less than income and paying our bills on time and in full. So here, creating a budget to spending is key. So it's our spending plan. We want to make sure that we can manage our money so that it does not manage us. So we know where things are going. So we want to be able to get a handle on our bills and determine where everything is going. So one thing that we might look at here is we would consider reviewing, and I'm going to show you guys where the recorded webinars are housed at the end of this presentation. But one resource here is consider reviewing the recorded webinar that we have out there called Building Your Budget. Building your budget. So that is absolutely one of the first places to start. Let's look at where our spending is, see what capacity we have, and see what things we might need to change. So that itself is a whole webinar presentation. So we'll just give those high-level tips there. So looking at savings behaviors, milestones we want to reach are having sufficient liquid expenses or sufficient living expenses in a liquid account. So that's an account that we can get to quickly, that we can use quickly. Also having sufficient long-term savings or assets. So creating an emergency savings is a great first place to start. We absolutely want to have that. So we're turning emergencies into inconveniences. Somebody said that one time and I loved it. We're able to stay in control and on track. So you may not think that you have a lot saved, but starting a savings habit, even just $10 at a time, is massive. So once we have that savings set aside, that emergency set aside, the next thing we want to start to look at is to look at some of our short-term goals and our long-term goals. So I challenge you to think about savings as future spending. So you are treating yourself with future spending when you set that money aside. And some great ways to start automating and setting that money aside is looking at some services like direct deposit. So having your pay immediately put into your checking or savings account, doing automatic transfers will help you with really save and get an automated savings habits. Um, Anytime that you get a raise or a bonus or extra cash, like we've just had the stimulus checks come out and we have taxes coming up soon. Anytime that we get something like that, an extra bonus or cash, we want to make sure that we are putting it towards one of our future spending. So whether it's going into emergency savings or it's going into one of our goals, we want to try to make sure we don't spend it then, but that we are starting to set that aside. So again, we will show you guys where the recorded webinars are housed, but I would consider looking at the webinar on emergency fund. It's called Emergency Fund: What, Where, Why, and How Much. All right, looking at borrowing behaviors. So the things that we are shooting for in borrowing behaviors is having a sustainable debt load and also having a prime credit score. So let's talk about what those mean. So again, a sustainable debt load is one that's not causing us stress every month, one that we can reach. But any debt at all is getting in our way of flexibility of options in the future. So we want to try to eliminate as much of that as possible. So if we are using a credit card, making sure that we pay that off every month. I would highly encourage you guys, do not give your money to other people. And yes, I know I work for a financial institution, but I would encourage you to not be paying interest rates on a credit card or loans that you don't need. Do not give your money to other people. The more of that you keep, you can use to meet your own goals. Also, when we're looking here, talking about financing, you'll hear the term a lot, debt to income ratio. And what this is referring to is maybe your monthly debt payments divided by your income. So a lot of lenders look at this and they're looking at a ratio that is less than 43%. So what I want you guys to keep in mind while you're thinking about these, that the lenders are looking for, and you're also planning for your own budget, when the lenders are looking at some of these equations and ratios, they are taking gross, or your total income before taxes and other benefits come out. They are basing it upon that. I encourage you, when you are looking at doing your budgeting, base that off of your net income. Base that off of the money that you have to use after taxes and other benefits have been taken out. That is the money that you can use for different essential expenses. When we're talking about a prime credit score, so we're going to talk about a couple of things related to credit score here, but when we're talking about a prime credit score, we are typically talking about a credit score that is 670 and above. So a credit score of 670 and above will give us flexibility if we need it in different lending options. The bigger thing that it will do is it will allow those financing fees to be less. So the higher your credit score, so in the FICO credit rating, which is what 90% of financial institutions use, is from 300 to 850. So the higher your score, the lower your interest rate is going to be. So that's one of the reasons that we are concerned with having a prime credit score or a credit score above 670, because that is going to allow us to pay less for the cost of services. It's going to give us more flexibility and allow us to pay less. So some of the consequences of having a subprime score or a lower score may be that we don't have options to even have those services, or that we're paying higher for them. So this is something that's not going to help us in our overall financial health. So let's let's take a sidebar and let's look really quickly at some of the things to do with credit, related to credit. And I'm going to give you a couple other resources here. But this is your FICO credit score. So this is what 90% of lenders use. Your FICO credit score, 35% of your credit score is made up of payment history. Have you paid your accounts on time and in full? 30% is made up of how much you owe. 15% up is made of the length of time that you have had credit. And the last two categories of 10% each are made up of new credit. So how many new accounts do you have? And then the type of credit. So your credit mix of installment loans and revolving lines of credit. So tips to improving our credit score. So tips to improving our credit score. Yes, credit score is not the one and only component of our total financial health, but it is a big piece. So we want to look at some things that we can do to improve that score. So we want to keep balances low on our credit cards. So that amount owed category, that 30%, we're looking at utilization there. So I want to keep how much I'm using under 50%, under 30% if possible. So keep total balances low and then keep that utilization low. I want to pay off debt rather than just moving it around. So those balance transfer rates may look great, 0% for 6 months, but that's going to be a new account and I still have that debt. So I'm just shifting it around. Don't close your credit cards as a short-term strategy to raise your score. So when you close those cards, after 7 to 10 years, they fall off your credit history and is no longer positively impacting that 15%, that length of credit. So you may not want to close those off as close those out, trying to get a short-term strategy of improving your score. And don't open a number of new accounts if you don't need them, because that's just going to increase the number of accounts you have, as well as increasing the amount of your total debt and increasing the amount available to you. So here I would consider looking at our recorded webinars. We have a recorded webinar out there talking about Credit 101, goes into all different aspects. There's also a recorded webinar called Your Credit Score, and that talks specifically about credit score. So the one thing I'll say about credit score, the biggest impact you can make is pay your bills on time and in full. That is the biggest thing that you can do. That's at 35% of your credit score is the payment history. The biggest thing you can do to positively impact it is pay on time and in full. So under the borrowing behaviors, still we have credit, but we also have debt. So let's talk about some of our tips to getting out of debt. So number one, making a list. It can be very overwhelming to take a look at everything that we have, but to get started and take action, we've got to do that. So making a list of everything that we have, the interest rates, the total amount, the minimum payment, and knowing what we have to work with. Looking at lowering our rates. So this is not always possible, but a lot of times it is. If we call and we talk to that creditor, a lot of times they will reduce our rate, which is going to reduce the amount that we owe in the long term on this debt and allow us to pay it off faster. Knowing how much we owe. So this goes back up to making a list. We really, as much as it can feel negative to begin with, want to know what it is we're working with. So we have to know, we have to be aware before we can work with it. After that, planning a strategy. So there's a lot of strategies with working down debt, and I'm going to give you a resource for looking at some of those. But a big resource for setting a strategy for paying down debt is contacting a credit counselor or sometimes even a bankruptcy attorney. But my first go-to would be the credit counseling, and we'll talk about some of our options for that and planning a strategy for working down that debt. And then the last thing here is absolutely monitoring it, seeing your successes, and adjusting as necessary. So under our recorded webinars, I would take a look at Debt 101. So Debt 101 goes into the different types of debt, also the different high-level debt strategies. Also, you can take a look at do-it-yourself debt payoff, where we look at the debt snowball and the debt avalanche strategies. Debt do-it-yourself and Debt 101. All right, so let's look at the last category of financial behaviors, our planning behaviors. So the very first thing that we want to hit here is having appropriate insurance. So to me, what appropriate insurance means is being covered for that which I cannot replace. So if I cannot replace someone's income, maybe I would definitely want to have health insurance. Or if I cannot replace my home, I would want to have home insurance. So life throws a lot of unexpected things at us. And while we usually can't stop these from occurring, we want to make sure that we're protected. So insurance gives us some measure of that. So I would absolutely make sure that I have looked at purchasing the right amount of insurance. So what I want to do here is I want to talk to an agent. I want to talk to an expert that is not biased and not going to try to sell me insurance that I don't need, that can take a look at my overall picture and help me plan for what's needed. If that includes life insurance and health insurance and automobile insurance, maybe rental insurance or disability insurance even. So here at Redstone, we have a insurance department. We have some of those agents on staff. You can always call and talk to them, and they can give you a free assessment and take a look at some of the options that you may need. Also, under planning behaviors, we have planning for expenses. So we know, again, we've talked about this a couple of times, setting money aside. So our emergency savings, number one, our short-term expenses, and then planning ahead for some of those larger expenses. So this might mean education, it might mean retirement, but being able to not only be comfortable in our current situation, but to be comfortable and confident as we move forward. So we're going to finish our presentation today on this final slide. We're going to go through, so these were each one of the milestones that we went through in the 4 categories of behaviors, but just to summarize those, you are financially healthy when you spend less money than you make. You have enough money in savings to cover 3 to 6 months of living expenses. So worst case scenario happens and you lose your income, you have enough in savings to cover 3 to 6 months. You can come up with $3,000 to cover emergencies. This money can come from your savings, from borrowing, from the sale of assets, but you can come up with $3,000 to cover emergencies. You feel confident that you are on track to retire when you plan to. You are paying no more than 30% of your monthly income towards debt. Your credit score is good, or you're actively taking steps to improve it. And your financial planning horizon is longer than 1 year. So I'm not only comfortable now and have now plans, but I can go out even further than that. And lastly, your insurance policies provide you with enough coverage in case of an emergency. All right, so that was a lot of material, So at this time, we are going to open it up for questions from you guys. So again, you can unmute yourself and ask your questions live, or you can also send your questions in through the question or the chat function, and Kaysher will be glad to read those off and we will answer your questions. So any questions that you've written down as we've gone through the presentation, please go ahead and ask those or send those in now. And Keisha, I'm going to turn it over to you.
Awesome. So we did have one question come in. Let's see. Ms. Ratliff and Mr. Ratliff are asking, is the $3,000 in addition to the 3 to 6 months worth of expenses? This is, I would probably say no. Bree, did you have anything else extra on that one?
Yeah, I would agree with you there. I think if we're looking at it as a phased approach, or maybe, you know, my first goal, my second goal, one of my first goals might be 500,000, 3,000, and then up to 3 and 6 months. So in my opinion, I would say that the 3,000 is included in the 3 to 6 months. It may just be an earlier stage.
Yeah, and for me, I always felt that was kind of customizable too, because like Bree was saying, with the small and achievable goals, you definitely want to start with those, and then they can change. Like she said, as your financial situations change in the future, that might be what you change your goal to later on, to include that, and then beyond. You know, I always feel like the more you have, the merrier. Any other questions? I don't see any others coming in.
So you guys can always email us. Keisha, would you mind putting our email in the chat function? And when I send out the email today, you can absolutely reply back to it. But if you guys ever have a question, and in just a second, I'm going to go through some more resources that are available. But if you ever have a question on anything that we've covered, anything that we haven't covered, if maybe we can assist with something or make a connection for you, please do not hesitate to reach out to us. So Keisha is putting our email in the chat function right now. It is financial education at redfcu.org. We are always here to support you. And if we can't answer a question, we will find someone who can. All right, let's go through some of the resources that are available. So let's take a look. Let's go to our website. So starting on the Redstone website, so redfcu.org, if you'll come over to the tools and discount menus and go to the bottom, there's financial resources. So on this page, we have a couple of financial resources that can support you in some of the things that we've talked about today. So at the top, we have 2 options for financial counseling. So Redstone has on-site financial counselors. So these were who we talked about when we were looking at maybe some of our debt strategies. So this is always an awesome support system. We do a lot of group talks here, but if we're looking for one-on-one support, this is a great location to go. So Member Solutions is Redstone's in-house team. So their telephone number and email is here if you would like to call and talk to them or make an appointment. Another awesome resource here is Balance. So we partner with Balance as a financial vendor. So they also have this is free certified counselors on staff that can help answer any questions. So their telephone number is there. Another awesome thing that they have, if you'll see right here, it says online resource. So this is a wealth of information that can support you in becoming empowered with different aspects of your financial life. So this is the Redstone Balance webpage. And as you'll see here, there's several options, one of those being Balance Track. So what this is, self-paced educational modules. So very, most of them are 15 to 30 minutes max, high level, give you information on a wealth of different topics, and then online tools where it has a ton of different calculators and videos podcasts, different things like that that can be very helpful in supporting you on your financial wellness journey. Back onto the Redstone webpage, the other thing that we have available is community resources. So when we talked about looking at some of those community services and resources available to you so that would free up some of your funds to do things that you needed to do on your financial journey, we have 211 listed here for you, and it has a ton of different information on resources available to you in your area. At the bottom of the page, we talk about credit score. So we have at the bottom listed here where you can get your free annual credit report. So this is your credit history that has all the information that feeds into your credit score. Also, if you have a lending product with us, your FICO score, which is used by 90% of lenders, is in online banking. All right, so let's take a look at where some of those recorded webinars are that we mentioned during the presentation. If you come down to the bottom of the page and you click on seminars and webinars, it takes you over to our listing. I apologize that it says it's unavailable. The link to what the reason it says we don't do registration through this service, we actually have a link that you can get to, so I apologize for that. The listing of all of the live and recorded webinars. So the ones that we mentioned, like Credit One or the Emergency Fund, your credit score, there's the debt one, the do-it-yourself debt pack. All we mentioned in the presentation, plus several others listed out here, recording, and then the live webinars. So today we're listening to the You Financially. Balance is doing a live webinar on February 9th, solving the mystery of credit. So this is a place to go to look for recorders and live that we have coming weeks. We will have another live webinar, so we'll be putting out and that invitation out very, very soon. All right, so that brings us to the end of our presentation. Before we do the doors, I want to hear from you one last time. So we have talked a lot the different aspects of financial wellness. We've talked about action items, things that you can. So we've done the talking. Talk means nothing unless you take action. So what I wanted from you is specific action, hopefully small. What specific action are you going to take this week to impact your overall financial wellness? Keep in mind, you have to be financially fit. All lives are interwoven, nothing functions in a vacuum. And if I can do something in another area and get positive feelings of success, it enables me to do something maybe in my financial life. So we want to know from you, what action are you going to take this week that will directly or indirectly impact your overall financial health?
Awesome. While we're waiting for your feedback to come in, a late question came in and was asking for the free credit rating score, Brianna, that you mentioned. They were asking if you could give the website again. Do you have that? And I can actually share that in the chat.
Okay, so the free credit score. So there is a difference between your credit score and your credit history. Okay, so your credit history is a listing of all of your different credit accounts and the balance and your lender. That can be found for free on annualcreditreport.com. annualcreditreport.com. So if you come to our financial wellness page and go to the bottom, It's the bottom thing there. So you can get one free credit report from each vendor. You can get one free per year. Right now, due to the coronavirus, the global pandemic, you can actually get your credit report from each of the bureaus free every week. I think this goes through the end of April. So just to monitor for identity theft and make sure that everything on there is yours, you can get it free every week. Now, we're talking about credit score. So there are different scoring models. FICO is used by 90% of lenders. You can get your free FICO score. For our institution, if you have a lending product with us, it's in our online banking. With other institutions, they most of the time offer it. The other way to get your financial or your FICO score is if you apply for a lending service and you're approved or denied, they have to give you your score. If you're denied, they have to give you the aspects that fed into that, the reasons why. If you are looking at free credit score monitoring services like Credit Karma or several other ones out there, be aware, look at those, because most of those are using the Vantage 3.0 score, which can be good to monitor, to know how your different behaviors are impacting your score, but it is not your FICO score that is used by the majority of lenders. So you would want to know that. I am not endorsing this source. This is not something I've fully vetted, but I have found, so most of the places are offering your Vantage 3.0 score, unless you have a lending product with them. But I have recently downloaded the Experian app on my phone, and it actually has the FICO score, gives me my FICO score as well as my credit history or my credit report. Now be very aware, it is also has a lot of advertising that is trying to sell me other products. It's trying to sell credit cards or different types of loans. It is also recommending that I purchase different services, like my credit report from different bureaus or credit monitoring. So it has a lot of other things with it. It also, you're giving it some of your personal information when you sign up for these types of services. Again, it's not some endorsing, but it is, as of yet, the only thing that I have found where I can get my FICO credit score without having to either pay for it through FICO or have a lending product. So, two different pieces. Credit history or your credit report, you can get that for free from annualcreditreport.com. Credit score, I can get that for free if I have a lending product through my online banking or with that financial institution. I can get that for free if I apply for a service. I can pay for that, and I might possibly be able to get that through the Experian app. So a long answer to your short question, but I hope that answered that.
Nice. And it looks like with that, a lot of people are saying for their action item that they're going to be following up on their finances, working on debt reduction, money savings, and even monitoring that credit report. And even someone mentioned having home ownership as a goal for the year. So finding ways to ensure that they have a good credit score and able to be able to do that. So lots of good stuff here.
Perfect, perfect. And so the next thing I'm going to challenge you with, because those were some amazing action items, get very specific on one thing. Very specific on one thing. So if I said I'm going to monitor my finances, get very specific on one action. I'm going to print off my online banking today and review those transactions. Okay? Or if I want to monitor my credit report, I'm going to go to annual credit report today and print off my credit report. Get very specific on one action. Amazing stuff today. We really, really appreciate you guys being with us. As always, please email us if there's anything that we can do to support or connect you with. We are here to help you on your financial journey and find that support.